And we're live, Howard.
Hey, buddy. Thanks. I am screen sharing. So let me now. Oh, can you see me?
Yeah.
All right. Monday evening, I'm in Phoenix. You're in San Diego.
I am in San Diego, yes.
So I wanted to do some screen sharing here to get everybody caught up with market wisdom, because it's just one of those periods where I think we just need to take a step back, kind of surveil the landscape, and instead of writing 9 paragraphs for everybody, I wanted to quickly try and tour the markets and how I'm looking at things right now. Is that okay with you, Ivan?
Yeah, sure.
Okay, so let me share my screen. And what are you seeing? I'm not good at this. So, Ivan, are you seeing my screen?
Yes, I am seeing your Koifin screen,
right.
Yeah.
Okay, so I'm on Koifin, everybody. This is my 8 to 80 list that anybody can get. Email me if you haven't gotten it yet from Koifin. Everybody can watch this in real time. And then I toggle between that and my main watch list. Ivan, now you can see that too?
Yeah.
Okay, so let's just start with the markets in general. And I'm just going to pull up the futures here, and hopefully everybody can see that the S&P right now closed at 2,800.
Yeah, important level. Yeah.
Yeah, and I was just going to say, we are back for all the blathering from dictator-in-chief. Is we are back at June pricing. Now, there's been a whole freaking. I mean, I didn't know this, but like we are literally at June 2018 prices, right? And this is now with that massive second round of tariffs and an escalation of tensions. Who cares why or how at this point? The point is we've got escalation. And so we're back at June prices, and we all know what happened in December. And I would argue that things are a lot worse than December, only because prices are much higher, and it just feels like there's some complacency there. You know, I talked about it a couple of weeks ago here on my blog when I felt, you know, just from reading the tea leaves with IPOs that and biotech chatter that, you know, a couple of weeks ago was a good time to panic. And so it feels like we're at the beginning of some kind of run on the markets. Do you get that feeling, Ivan?
I mean, of course. I mean, last week, the S&P, the Nasdaq 100, the buyers tried to support the 50-day moving averages, and this week that level was lost, which basic technical analysis 101 says that what used to act as support now will act as resistance. So that means that any rally towards the 50 days
and
most likely will be started
right now, Ivan?
At least initially. On the S&P is around 285.
So 50 points upside. Anyways, I'm looking here at a FinViz chart, and we can see this support around 2,800 goes back to June. You know, we broke it in December, of course, but we gained it back surprisingly quickly by February. In late February, early March. And so this 2,800 area is going to be really interesting. And that's why I wanted to do a quick update here. So I don't know how we play out, but I'm not thrilled with the price action. So I'm going to go right to my 8 to 80 list and see what gets me excited. And what you can see, I think every stock on my 8 to 80 list, Ivan, was down today.
I think the only momentum stock that was up today was Tinder.
Which I talked about, unfortunately, and I got this wrong. I mean, I got it right, but I didn't really put on the trade or the swap. Was swapping out Spotify for Match.com, and that would have been a nice swap. Spotify Match is up about 15%, and Spotify's down 3 or 4%. So we can see here, Ivan, on the list, if you're seeing it, today was just one of those days where stocks were down 6%. Apple was down 6%, Lulu down 4%, Spotify down 4%, Tencent down 4%. I mean, these are the stocks that obviously Nike and Apple have exposure to China, And so I wrote about those last night that I'm kind of worried about those. But and relatively, you can see McDonald's in the 8 to 80 list, which I'm super, super bullish on. And I'm going to pull up a chart and walk people through that again.
So I read somewhere that,
and we talked about this on the show last night, Ivan. And I was trying to explain to you why I like McDonald's.
yeah,
Because it is everything. And again, like if the market rolls over here, McDonald's can quickly drop to 180 again or back in the low 190s. And I'd rather buy companies in the 8 to 80 list on 10 to 20 to 30% downdrafts, not at all-time highs, because these are not growth companies. But I think a lot of tea leaves are lining up well for McDonald's. And you can see here the run from the 80s, $3 a share to $200 a share. So it's not like this is an undiscovered story. But I think if we look back over 5 years and just see the run that it's had over the last 5 years and the fact that it's digesting, I don't think people are giving the McDonald's enough credit for being a technology company. So I think on today's like today, I like to go through the markets and just kind of see my portfolios, what's doing well. And I think relatively right now, restaurants and in the 8 to 80 list, McDonald's. Now, on the downside, I am worried about Apple. And a couple of weeks ago, I was selling a little bit because, and you can see from the price action today that, there is exposure to China. They were down 6%. The market was down 2.5%. And Apple generally isn't 2 times more volatile than the market. So I'm not worried, but I'm also not buying anything here. Now, if we go to my full watch list, which is a little wider coverage, we can see the worst stocks. We had stock, Chipotle's down 18, Tesla down 12, breaking support, which kind of makes sense, Ivan, because of their financials, right? They've got, today it took out, 3 or 4 year kind of support.
So they raised money recently, so they should be fine at least for 6 months.
Well, they may be fine. Doesn't mean the stock will be fine.
Yeah.
I'm not questioning whether they're fine. The stock can go down whether the stock was going up with their financials in turmoil. The stock can go down, post. So I definitely think today's close was just bad for a company like Tesla. And the reason they're on my watch list is because I want to track them. So you can see, I'm following maybe 60 stocks on my watch list. I think what stood out today was China and India were just obliterated. And as much as I like having a little exposure to India and calling it a VC play, it's not fun to watch that. So I've been dead wrong there, and it got crushed. On the upside, we can see, I don't know why other than their earnings, we can see Match.com was just a green in a sea of red. Turning Points, which is a stock that I like and talked about Market Wisdom, got absolutely annihilated last week. I don't know if they have some exposure to China, but today kind of bounced or didn't crash with the rest of the market. I think they did their kind of crash on Friday for whatever reason. And but you can kind of see how I'm using Koifin here. So this is my watch list, and you can see it's just an ugly day, and there was nowhere to hide. If I was to pull up all my software stocks, Ivan, from Twilio down 10.
Yes, everything that held well late last week.
And there was a couple things that really stood out to me today. The first was that the Bitcoin proxies weren't up with Bitcoin. Bitcoin was up, I don't know, almost
10%, 12%, yeah.
10, 12%. And over the last week, I don't know, Ivan, can you pull up? I'm just trying to pull up a chart.
For Bitcoin, yeah, if you go to Finbit.
Yeah, where do I pull it up? No, Bitcoin US dollar.
Yeah, you can do that there.
Sorry, guys, I'm not.
Yeah, we're seeing the chart. Yeah.
Yeah. So we can see written off for dead, and now back, crossed 8,000. What was interesting to me most about Bitcoin today was that it was rallying without the proxies. So Nvidia was kind of that stock that everybody was poor man's play on
Bitcoin. Yeah.
Bitcoin, and you can see it was down 6% today. It's down 50% from all-time highs. What's interesting about this little Bitcoin move here is that it's open source, and I talked about this a little bit in Momentum Monday, Ivan, for everybody, but Elastic, which definitely had a bad day today. I'm just trying to, why am I not being able to? Sorry, everybody. I'm not used to driving. I'm used to Ivan driving. Okay.
I can show the charts if you want to know.
No. What's interesting, Ivan, today is that if we look at open source, and I talk about three stocks: Mongo, Elastic, and Bitcoin itself. Those are probably kind of like the three, and then all the crypto, right? Because crypto is kind of like open source for people that are thinking just about decentralization, whereas Mongo and Elastic are open source when you're thinking about capitalism and profits. Whereas crypto, I think what stood out today is crypto. We can make jokes about it, and it's still a very tiny asset class in general, but it's the first time that I've seen it as a flight of safety, where even software stocks today got hammered, and money came out of, Mongo was down 6%, and Elastic was down 6%, but Bitcoin was up 10%. So there is a difference here. There is a little bit of fear, and there were rumors that
there's the flight of capital out of China.
There was a flight of capital out of China. And then the other interesting thing here, Ivan, from Koifin, as I pulled up, is looking at IPOs, they were absolutely annihilated today. And the IPO ETF doesn't even have Uber in it yet, and that was down another 11%. But the IPO ETF was off by 2 standard deviations today. So it was
this is completely normal during market sell-offs.
No doubt.
Yeah.
So there's a lot of things that just say this is just a good old-fashioned, correction, and the stocks that have done the best are pulling back. And I'm just trying to look for things that stand out. And so what stand out to me right now is crypto, which most people are not going to play, and that's open source. Mongo and Elastic, which Market Wisdom people own. Match.com, which we've been talking about the last 2-3 weeks, and that was the one that moved. Twitter, which is something that I recommended and that I have a position on, is doing what I feared but hoped wouldn't happen. They're giving up the gap on the earnings gap. So
not yet. I mean,
not yet. But I feel like it's just typical, right? Like, it wasn't a great earnings report, but Wall Street, it felt like here when I was excited about it, it got this little head fake here above 40. And now we're back in this gap, below 35, close below 35. And I believe all bets are off. And if the market sells off, I don't think Twitter's strong enough to avoid slipping back below 35. So I went from pretty excited about that idea to, not sure. I'd be surprised if we don't get stopped out of that trade, which is, the risk reward. I still would take that trade, and I didn't expect the market to sell off, but that's just full disclosure on the Twitter idea. Back to, Ivan, let me just pull up Market Wisdom. Okay, so now you can see Market Wisdom. Here's my portfolio. And so Twitter, I'm fearing that we may get stopped out of that. Elastic is break even. Spotify down 5%. PayPal kind of has been the only winner this year. And obviously Make My Trip, which I'm not giving up on, has been an unmitigated disaster. And today with India, you can see that India, the small cap ETF, which I'm sticking with, is down 23%. This is kind of like my venture idea for this portfolio, and it hasn't worked out.
Is their currency down a lot, the Indian rupee, or what is the main reason?
The fact that like it's we're picking fights and we're playing favorites, and India's not a favorite, and they're definitely there's currency risk, and the fact that the e-commerce market there, people just don't have the money, so it's a high risk market. Make My Trip is the best of breed travel company. I'm just wrong. But again, some of these ideas that I give are venture capital like ideas. I want my exposure to India, and I'm not just going to roll over as a typical 10 or 20% sell off. And I believe that we're going to just have massive 10-year gains in India. So I'm not, watching those day to day. And fundamentally, there's nothing wrong with the companies. It's just really out of favor. So I don't know what else to say here. I think in wrapping up today, I think, and then I'll let you, Ivan, kind of share some ideas. I think there's no doubt that I'm going to keep an eye, Bitcoin now being, the number one performing, crypto being the number one performing asset. A couple other ideas that stand out to me, Ivan. I'll go through them right now, and I'll write up some of these. Is Roku? I mean, massive earnings breakout. I don't use the product. We use Apple TV. Do you have a Roku, Ivan?
No, I don't. So
recent IPO last year. They're basically the poor man's Apple TV, and the country's pretty damn big. So the poor man's Apple TV had a massive earnings beat. I mean, you can see
they had a big short float, so that played an important role.
I'm not chasing it here, but it's definitely on my watch list, because this is how young people, if they don't have Apple TV, this is how they interact with the internet and their television. So Roku is just on my watch list. Obviously Match.com, which was part of my 8 to 80 list on a run from 15 to 60. And I dropped it, and I'm kind of kicking myself. And we talked about it a few weeks ago, and now it's up near 70. I don't know how this company stops. From OkCupid, they own every niche in dating, and they figured out how to monetize it. I talked to the CEO of Tinder today, Eli Seidman. We didn't talk about business in general, just talked about all the assets that they own.
Dating tips.
What's that?
The dating tips. That's what were you sharing with him, or what?
No, I was just going through all the different assets that they own in a random conversation. It's just incredible how many niches they own. So that stood out to me. Obviously, the exchanges have done well over the last.
Definitely, yes.
And as volatility rises, this is where money will hide out. I don't know if you're going to have massive returns here, but them and the NASDAQ.
It's a slow mover, but CME, they just released a brand new product called like micro E-mini futures, targeting retail traders. So it will be interesting if it catches up.
Yeah, so they've held up well. There's another company, an enterprise software company called Workiva. I don't know if this was on our list, Ivan.
Yes, it is, yeah.
Okay, it's on our list. In the mid 40s, this is interesting to me. So this is on my list. It's kind of a less sexy enterprise company. And I'm going to walk you through what they do, because I've really been doing a little work on this with Danny. And snapshot is, let me explain it to everybody. So it's really kind of a reporting. I'm trying to explain it. But anyways, I'll link to it in it. But Workiva's on my list, and that's a new name on my list. The Trade Desk, they basically are the CME for ads, and just a massive give back. But in this 160 area, this will probably be the first kind of trade that I put on. Their earnings were great. You can see the fake breakout, a lot of these fake breakouts, and now it's right back into this gap here in the 160 area. Everybody that uses this product, everybody in the ad tech business defers to these guys as the kings. This is not a cheap stock by any stretch of the imagination. It's only been public for a couple of years and has been an 8-bagger. But again, it's on my list and a strong stock. In the e-commerce space, Zebra. This has been on my list to watch. It's just giving back and dropping back into
an interesting level here. I mean, it should be bouncing here.
It should be, and it isn't. But again, it's just a stock that I'm watching for momentum, and you can just see like this has not been a pretty. I don't want to own the weakest. I mean, it's giving back all of its 2019 gains. If we look at a 5-year chart, though, we can see that it's had an incredible run. But there's another stock that was working that stopped working. Hang on, I'm just going through some other on my list. SaaS, PayPal, NASDAQ. Okay, I think I'm caught up on my ideas. I just want to go through a few other names that were working. Yeah, Roku I covered.
Twilio, Team.
Let me just pull up Twilio. Twilio is my favorite name, but it just got hammered today. Stock that I remain long. And then Shopify, which I think I mentioned.
Also TEAM, that's also a very interesting name. It's a British software.
Well, it's Atlassian, and they kind of have just a stranglehold on developers, and broke out. Yeah, at the 110, 120 levels back. There's a lot of stuff still really working, and there's no reason I feel to rush back in, but this is a good time to kind of make sure. The reason I want to do this video is to make sure that we're caught up, and you just want to make sure your portfolio's positioned well. I don't see anything on the 8 to 80 list. I'm going to go back to it, Ivan, that I'm rushing out to buy. I mean, Spotify's on double secret probation. You can see if we go, Ivan, to the year-to-date list, everything's had a great year. So this is just in year-to-date, we've got. What's that?
Can you see the average year-to-date, or you cannot?
No, I haven't figured out that, but we're still up over 20% on average year-to-date. And so, I'm not rushing in to buy this list. Apple, I was selling at 190, 200, 210. I'm not rushing in here to buy it. PayPal up 27% still year to date. So this has not been a bad year. Even Johnson & Johnson still up 7% year to date, and Spotify's even up year to date. So again, I don't feel a need to do anything fancy in this table, and that's why I kind of want to go through this to go get people through my thinking. If picking individual stocks here, I think you have to stay with services and software, like restaurants and software, because of the tariffs and because of the rhetoric. And I think the most interesting thing was that what you would expect, the IPO is just really nasty, and the beta is very high here. Uber has been, just basically a disaster, down almost 20% since it was priced at 45. But I also like it. I'd be more nervous if Uber had doubled.
Yeah, I mean, that's a great opportunity for a longer-term investor. Uber pulling down 50%.
I think 62 billion is a good opportunity. I was selling some Uber at 40 billion, so it's still up 50% the last 3-4 years since I sold it last. I'm not rushing back in. If Uber's on its way to be a teenager, we have bigger problems than Uber itself. So I think you want to watch IPOs. Hit me up if you have questions about how to pull that up on Koifin. But I don't think there's a reason to rush in here. I expect the markets to bounce, but if we were to drop another 5-6% over the next week or two, I wouldn't be surprised. And I want to keep, my powder dry for that. I think it'll be, it's summer. I don't think, people have had good years, And if they want to take off the summer, now's the perfect time to, over the last 2 weeks when the professionals, I say that in quotation marks, were selling, and they're in no rush unless we get down into this 2,600 area, where I just don't, and that's what I'd love to see versus, buying up here at 2,800 just because the market's, oversold. I'm not going to be that sucker. And especially with all this supply on the market, even with all these IPOs, whether Uber has done well or not, and whether people have made money or not in the last week is not important. Uber did raise $8 billion, and there's going to be a massive amount of supply in Uber stock over the next 5 to 6 years as insiders sell and get that stock worked. So I'm kind of thrilled that Uber didn't double, as I said, because that would lead to different problems. Lyft in the same space must have got hammered today.
Yeah.
Yeah, down to 48. Wow. Although, not a new low. It was a new low.
It's a new low, new all-time low.
Yeah, new all-time low. So where'd that come public at, like 80? Yeah, I'd rather own Uber over Lyft. So Uber's at a 14 billion. So it's generally trading at a 4-to-1. I think the markets have decided that Uber over Lyft is a 4-to-1 market cap range. So I think you got to just use that all relative. Okay, so Ivan, what am I missing out?
I think you covered a lot. As I mentioned, the 280 level, it's really important in a short-term perspective, and if we lose it, I think we're going straight to 275, 270.
Yeah, down here, Ivan?
Yeah, somewhere there. I mean,
yeah.
And if there is a bounce, I think we will initially encounter some resistance near 285.
Yeah, I feel like we're in a little bit of no man's land. I think people will be up.
It's kind of range bound. That's what I expect for the foreseeable future. Very choppy and range bound. I think great market environment for really nimble intraday traders, which means challenging for everyone else. So
yeah,
I think your battles.
Be really deliberate. I don't think you have to, I try and outperform the market, which I would say not doing the last 2 or 3 months, which I'm okay with, as long as it doesn't lead to 12 months of underperformance. So I think you just got to stick with your rules and be really deliberate with, which I really try and do, which is why I try not to share 100 ideas a day. But, I'm out here working, thinking through this market. And I just wouldn't be surprised to see 2,700 handle at some point this summer on the S&P. If that happens tomorrow, great. I got a list ready. If that happens over the next 3 months, we got to be prepared for it.
I think the good news is that I think today CNBC ran a market in turmoil special, so probably tomorrow will be up 1 or 2%. So, but that's on a short-term perspective. CNBC. I think I saw it somewhere. So yeah.
Markets in turmoil. 7 p.m. Friday, May 2nd. No, I don't know. Did they run one today?
I saw something on Twitter.
Hang on. CNBC. Let's just get there. Yeah, I think at 800 CNBC. Yeah. No, I think people are just joking.
Oh, people are just joking. I mean, they're hoping for it because that's usually a.
No, I think the opposite, Ivan, was this. I'm not a great trader, but I think if I go back to this blog post and we go through this from 2 weeks ago, hang on. And I shared this. Hang on, everybody. Are we too complacent, right? And this was just 2 weeks ago, and we're taking some Apple and Shopify off the table. Apple was back above 210, and obviously I wish I had sold more. But here's the things, and nothing's changed in 2 weeks. Seeing a lot of penny stock biotechs double. Okay, that was just something that is a weird sentiment that I get to see that very few people get to see, and that turned out to be correct again. As I was talking about just watching you and swing traders, it's been an ugly 3 months for the best of traders, and now that's playing out in the market. right? It's not just you. You're high cash, I imagine, right now, are you not?
Yeah, I am. I'm mostly.
Yeah, there you go. Because you
in
chopped
today,
around, and that was a warning sign. When good traders get chopped, the market catches up. Overall, I just had this feeling of complacency that I was seeing. And then forget the colonoscopy, but I forget what else I was talking about. Oh, the only person in America not to file an S1. So I said, in the good news, Uber did get their 8 billion, but in the end, that might have been the short-term top. And a lot of people said, oh, Uber's going public, that's going to be the top. I think combined with all the other factors, yes. If we look at this, when I wrote this 2 weeks ago, we were too complacent, and let's just see where that goes. Thanks for this, Ivan. I'm going to just get it out to everybody.
Yeah, sure.
Okay, talk to you.